Welcome to Associated Builders and Contractors of Western Washington's webinar. We have Jason Sperfslage and Jennie Bryson here from Beneco to talk about prevailing wage basics. Jennie, I think you're kicking us off.
I am. Thank you so much, Janessa. Thanks everybody for joining us this morning. So before we get started, we're going to take a quick poll. If you would all be so kind as to answer the percentage that best applies to the amount of prevailing wage work that you do. This is helpful to us. It gives us a good idea as to whether most of you are just starting out in prevailing wage, if you're more experienced. Either way, we're really going to be covering topics and material that will apply to all of you. So it looks like a good majority of you are just starting out, and we've got a mix as far as those of you who are been doing this a little bit longer. So that's great. Thank you so much for taking the time to answer that. Today, we are going to be covering the following topics. Who is Beneco and what do we do? The Davis-Bacon Act and prevailing wage regulations. How to save thousands of dollars in payroll taxes and insurance premiums. How to use Fringe dollars to reduce the cost of employee benefits and optimize your 401k with Fringe dollars. And then lastly, attracting and retaining key employees by winning prevailing wage jobs. First, we will start off with a little bit about Beneco. We were acquired by Census and we fall under their future line plan of business. Census is the largest provider of retirement plans in the United States, along with Future Plan being the largest third-party administrator of retirement plans. So that really gives us the backing of a larger company plus additional resources. Over the last 10 years, we've had over $700 million in prevailing wage contributions to our benefits programs, which has saved our clients $125 million in labor burden. We want to share with all of you how you can do the same and educate you on how you can take advantage of winning more bids. Beneco has been in business now for over 35 years, serving clients coast to coast. We work almost exclusively with contractors that do prevailing wage work. And we are proud to say that we partner with a variety of industry leaders. We are currently partnered with over 10 local ABC chapters across the country, as well as others, NUCA, LCP Tracker, Blue Book, RPGA, and IECs, just to name a few. So as far as what Beneco offers, we focus on retirement plans, medical and ancillary benefits, life insurance, as well as HR and compliance services. So we do the record keeping and the third-party administration of these programs and benefits. And what's really unique to what we do is all of these programs are tailored specifically for the prevailing wage contractor in mind, allowing you to take advantage of prevailing wage laws to help you save money on those projects and ensure that you're compliant when you're setting up these benefits for all of your employees. So that being said, I'm going to turn the time over to Jason. He's going to take it from here and go over the remaining topics.
All right, thanks a lot, Jennie. Thanks everybody for joining us here this morning and for ABC Western Washington for having us do this presentation for everybody. We will have some time available at the end for a Q&A session. So if you have some questions that come up during the presentation, you can submit them now through the Q&A function or through the presentation or save them to the end. Either way, we will have some time to get to those at the end of the presentation. So one thing to kind of start on here is I think this is a timely topic for us to be discussing today and has been top of mind with a lot of the associations that Jennie mentioned that we work with, is getting this information out to their members. Right now, due to kind of the buzz in the industry regarding the infrastructure spending bill that passed back in November, is that with that being passed and with these projects starting to kick off, we're seeing a lot more prevailing wage Davis-Bacon projects coming up from the infrastructure bill that is doing a couple of things. One, it's a great opportunity for companies that have been doing prevailing wage work to have that kind of part of their business continue to grow and expand their business. But also, with that publicity and with all these jobs coming up, it's prompted a lot of companies to start looking into how to get into this market. And that's probably why you go back to the poll question that Jennie asked about how much prevailing wage work you're doing. There's a lot of people on the call today that are maybe pretty new to this, is that you see it as a way to grow your business and a new opportunity for you. So in turn, what that also is doing is making these jobs more competitive. So more people are trying to get in this line of work. Those companies that have maybe done prevailing wage work for a while, they're going to see, being more competitive for them to continue winning the bids, and for companies that are new to it, finding a way to get into the market competitively. So I think that's a big part of what we'll be talking about today, and will be one of your key takeaways that you can take after our presentation. So what is the Davis-Bacon Act? That kind of the basis of everything we're going to be talking about today. The Davis-Bacon Act is the federal law requiring contractors to pay at least the locally prevailing wages, subject to federally funded projects nationwide, as well as state and locally funded projects where applicable. And as you can see in the map below, the different states that have state prevailing wage laws versus some that do not. For people on the call today, for the state of Washington, that does include state and locally funded projects as well as federally funded. Conversely, I happen to be based out of Phoenix, Arizona. In Arizona, there is no state prevailing wage law. So here, these laws only apply to those that are funded by the federal government, not to those locally funded. So if any of you do work in different states, that's something to kind of keep in mind. Our conversation today is going to be mostly obviously focused on the rules and regulations of Washington. But if you do work in other states, the concepts will kind of remain the same. And if you do have any, questions specific to some other areas or places that you do work, you can ask us later or follow up with us after the presentation. As Jenny said, we have clients nationwide, and really a lot on the West Coast. If you go California, Oregon, up to Washington. In the prevailing wage rates, they're varied based on geographic location and craft. So, some states have the law, some don't, but even within like the state of Washington, the rates are going to vary based on location by what county you're in, and also based on the different crafts that your employees are working. So when do prevailing wage laws apply? They apply to all federally funded construction projects in excess of $2,000. And then state and locally funded projects that have many Davis-Bacon laws, which includes Washington. And then actually in the state of Washington, there's no minimum threshold for the size of the project. So it'll apply to all publicly funded projects, construction that would fall under the prevailing wage regulations. Another one that, in case anybody on the call here ever sees this come up, or you're asked about it, is the same concepts also apply for Service Contract Act contracts, which are contracts with government entities. They're sometimes can be related to landscaping or some work like that. More often it's something like security services for a courthouse or a jail or things like that fall into the Service Contract Act, which the same policies apply to that as they do the Davis-Bacon Act that we'll be talking about today. So a little more in detail as far as when this applies and when this does not apply. These prevailing wage rates that you're required to pay employees and the rules that you need to follow apply to laborers and mechanics on qualified projects whose duties are manual or physical in nature. So that's kind of the specific definition of who this applies to within the company. It's just those laborers and mechanics who do actual physical labor on the actual site of the work. So the site of work is defined in the Department of Labor Prevailing Wage Resource Book. If you're looking for a not so interesting 30-page read, you can check all of that out. But we'll have a few key points that we'll pull out of that for you today. But basically what this is getting at is that it only applies to the work that's actually done at the site of the project. So if your employee is doing some work in your yard, where your business is located, not on the actual job site, even if it's in relation to the prevailing wage project, it does not apply to them for those hours worked. It's just the hours worked on the site. As it relates to owners and administrative employees do not get paid prevailing wages, even if they're in the office working on bids for a prevailing wage project or submitting certified payroll. There is no wage determination for them. It again only applies to those laborers and mechanics on the job site. Owners do not need to be paid prevailing wage rates. Generally, they do not. The way that they define that is if the owner's responsibilities are primarily administrative and managerial in nature. So ownership type responsibilities is their main function of their role in the company. The best example I can give there is the owner of the company let's say you may be behind on a project, or you have 2 or 3 employees call in sick one day. So the owner of the business goes out, on the job. It's a painting crew. The owner is painting for a day on a prevailing wage project. They do not need to be paid prevailing wage work for that day, even though they are doing the physical work, just because that's not the primary function of their responsibilities. Also within the state of Arizona, or not Arizona, of Washington, the definition and how they determine if supervisors or foremen are required to be paid prevailing wages. And the way that's defined is if their hands-on work within a week is over 50% on the project. So if the supervisor or foreman over the course of a week, if more than half of their work on the job site is considered hands-on or physical in nature, a labor type of work, then the supervisor or foreman would need to be paid prevailing wages. If again, 4 days out of the work week, they're doing supervisorial type of responsibilities, and they're not doing hands-on work, and then 1 day during the work week they are, you would not need to be paid prevailing wages, since that's less than 50% for the course of the week. So I was mentioning, paying the employees prevailing wage rates on these projects, wage determination. What is a wage determination? And that is the regulation that establishes the prevailing wages and fringe benefits for work classes in geographic areas. You can go online here on the L&I website, and you can find all that information. And how these rates are determined is they're determined based on surveys that are sent out. They're going to be heavily influenced by the rate of pay and benefits from the unions in the area. They're always very good about getting those surveys back. Those will be surveys to union and non-union companies on what employees are being paid for different crafts and different type of work in that area. And based off of those, with the influence of the union rates, they're going to come to the prevailing wage numbers for your area and your craft. A few things to keep in mind specifically on this is that there can be significant differences between regions. That can be, like I said, even within the same state, county to county. You move from one area to another, there can be significant differences in the prevailing wage rates. So you definitely want to make sure, if you're, when you're in the bidding process, if you've done one prevailing wage job in one area, that you don't just assume that the rates are going to be the same in another, that you're looking up that information for the correct job that you're bidding in that location. Also, as far as the rates, I covered how they're determined. As far as the timeline, the rates are updated the first business day of August and February in the state of Washington. So that's where you can get the state prevailing wages and find most of the information on the L&I website. They actually have a lot of good information there that is relatively easy to find compared to how it can be in some other states. So you can check that out for more info, or follow up with us and we can answer more questions there. So here's an example of a wage determination. So this one here is for King County for a cement mason. And we'll work into this some more and break it down. But you can see for the different categories here, the wage for a cement mason in King County is $67.41. It can vary a little bit by some of the different kind of subcategories of cement masonry. We're looking at $60 an hour is the prevailing wage rate that these employees need to be paid for this classification in this area on this type of work for these projects that you would be doing. Now, I'm giving you another example of a wage determination sheet. Now, this one here is from the state of California, and I just wanted to show this to you as kind of an illustrative purpose and show how you get to the prevailing wage rates that you have in the state of Washington. So if I jump back quickly, here you'll see for cement masons, the different rates is the one total hourly amount of $67.41. That $67.41 is comprised of, to get to that total, you have, in theory, a base wage, or an amount that the employees would be paid as cash wages, and then an amount that could be used as fringe benefits, or fringe benefit amount from that $67.41 that is used to pay for benefits for your employees. Now, in the state of Washington, they just give you one lump sum amount. And then basically it's kind of up to you, based on the benefits you're providing your employees, to how you pay that $67.41, whether it's all as cash wages, or if you're using some of that $67.41 for retirement benefits or medical, etc. Now, The reason I'm showing you the one for the state of California is just because they actually break it up into the separate categories, so you can kind of see how those numbers are reached. So in this example here in the bottom left, you have a base hourly rate of $32.01. Retirement in this example was $650, $686 for health, then vacation, holiday, and training, for a total of $40.48. So the way you can look at it in Washington is the number that you're getting is from this example, the $50.48. You're just seeing the end kind of final result, the total number of everything combined, and then it's up to you for kind of how you split that up into the different categories. So when you're looking at that $67 an hour or whatever for your trade, your total prevailing wage rate is, think of that as including a base wage plus dollars for employee benefits, and that's how you get to that total amount of $67. So why is this kind of all important, this breakdown of the prevailing wage rate and as far as a base wage and fringe benefits and how you're able to meet those obligations? And the reason that it's really important for contractors to know, one, if you're getting into the space and you're looking how to win these bids, or you've been trying to get into it and you've noticed that when you submit bids, other contractors are significantly lower and maybe winning these projects, and you're wondering how are they able to bid these rates at these prices and continue to be profitable and run a business. And this is a key component that probably explains how they're able to do that, is you have the concept of labor burden. And anybody on this call that's maybe involved with the bidding process at your work, at your company, you should probably have this figured into your labor cost when you're bidding projects. The labor burden is the cost of paying your employees their salary or their hourly rate. If you're paying an employee $50 an hour, it costs the company more than $50 an hour to pay them that wage. It's actually going to cost you more like $65 an hour. Now, the reason that is you're paying the employee $50 an hour, but then you also have payroll taxes. So that's your FICA tax, that's 7.65%. So right away, you can add on 7.65% in cost to the company to the $50 an hour you're paying the employee. Plus, you have your federal and state unemployment taxes that need to be paid on that. That's usually 1.5%, 2% combined. So between those, you've got maybe close to 10%. And then your workers' comp and general liability premiums can also be tacked on to your labor burden rate, if they're based off of your payroll cost. So when you add up all of that together for your labor burden for most companies, that runs about 30%. So basically it's saying every dollar that you pay your employee, it's costing the company an additional 30 cents an hour to pay them that $1. So what we're going to talk about today is how removing those fringe benefits, the amount of the prevailing wage rate that can be used to fund benefits programs, if we remove those dollars from your payroll and put them into benefits, those dollars forever escape labor burden. So it will help you not have to pay payroll taxes on those fringe dollars, the amount used for benefits, and also not have to increase your workers' comp general liability premiums from those dollars that are used for benefits versus as cash wages to your employees. And for the majority of companies that we talk to about this and run an analysis on their company, it's tens of thousands of dollars a year and oftentimes over $100,000 a year that they can reduce the cost of their labor cost over the course of the year simply by redirecting how they pay the prevailing wages to their employees. So for legal uses of fringe dollars outside of, first you have the option of paying the fringe dollars as cash wages. You can pay the full amount to the employee on their paycheck. Or on top of that, you can put some money into pension and retirement, health and welfare, ancillary benefits, apprenticeship plan, and vacation and holiday. So we're going to discuss a little bit about these and kind of some of the reasons why how you can figure out how to use those fringe dollars. But first, I wanted to take this opportunity to pop up another poll question here. I'm curious in the audience, how are you currently paying fringe dollars to your employees? So you should be able to check all that apply. So if you're paying the fringe dollars or basically, how are you paying the full prevailing wage amount to your employees? Is it all as cash? Are you using some for retirement, using some for health insurance, HRA program, vacation, sick time, or are we just putting everything into cash? So give everybody just a few moments to get some answers here, just to kind of see how everyone is currently handling this, and then we'll cover some of the pros and cons of some different methods, some things that you need to know to remain compliant. The big thing is making sure these programs are set up to function by prevailing wage laws and regulations, and then how to maximize these for your company, and then utilize those tools to help your employees. But I think it seems like we've had the majority of these submitted, so pop these up here. So if the majority of you are paying some in cash wages, and you've got retirement, pretty good split there between retirement, health, HRA, vacation, and sick time. So pretty common breakdown there. It's good to see that there's a good amount that are using for some forms of employee benefits. So now, when you're looking to use some of this prevailing wage money for these programs, there's a few things to keep in mind. So again, we're going to kind of revert back to the Department of Labor Prevailing Wage Resource Book, and this comes from Section 29 of the Code of Federal Regulations, 5.2 and 5.23. Fringe benefits, they're defined as, under the Davis-Bacon Act, the terms wages, scaled wages, wage rates, and prevailing wages that include the base hourly rate of pay in any combination made to a trustee or third party pursuant to a bona fide fringe benefit fund, plan, or program. So that's basically the definition of how these dollars can be used and what the benefits programs have to follow. So we're going to break out some of those terms and get a good understanding of what all of those mean. But another key component of this is in the methods section. At the bottom of the page is a contractor's prevailing wage obligation may be met by any combination of cash wages and creditable bona fide fringe benefits provided for a covered worker. So what that means is that, one, how this prevailing wage amount is paid to the employees is, one, it's up to the employer. So the employer gets to decide how this money is paid to their employees. The only rule, or I should say the rules that they have to follow as far as the amount is that the grand total must add up to what the total was. So it can be any combination of cash wages and approved benefits for the employee. So for example, if you offer health insurance and you're using some of the prevailing wage money to pay for the health insurance plan, but you have an employee that maybe has health insurance through a spouse, so they're not on your health insurance plan, that money that would have paid for their health insurance, the company can decide to put that money into the retirement plan for the employee. You still need to meet that grand total amount, but how you do it is up to the company. So that money can go into the retirement plan, or it could be used for a vacation plan or an HRA program, any of the approved methods, or part of it could be paid as cash to the employee. Again, that combination is up to the company. You just need to make sure that you're meeting the total amount. So for the wage determination example that we used for Washington, it was 67 and some change. Just make sure that the total compensation per hour that employee earned was $67 and change, regardless of how it's made up, and you'll be good to go there. Another term that was in there with the fringe benefits is a bona fide trust. So this is a rule that prevailing wage benefits programs must follow. They must be made into a bona fide trust. And there's kind of three different key points that a bona fide trust must follow. Is one, the fringe benefits must be made to the plan irrevocably, which basically means that the money cannot be pulled back out by the company. So you're putting dollars from their prevailing wage work into a benefits program for the employee, the specific employee that earned them, and those dollars cannot be pulled out by the employer. So, the company has an unexpected expense, something comes up, equipment breaks down, that money is protected for the employee in a separate account, not in a company account. And you're not able to pull it out. That comes into effect a lot with vacation plans where companies are maybe managing them themselves versus having them in an irrevocable account, and can get into some compliance issues there. So this irrevocable trust must be with a third party. So again, it cannot be affiliated with the contractor or subcontractor. It must be a third party trustee on this irrevocable bona fide trust for the employee. And the trustee must assume the fiduciary responsibility imposed upon trustees by applicable law. So these are the different kind of definitions that these programs must follow. And this is how we have structured all of our benefits programs that Jennie was telling you about, to follow these rules and regulations to make sure that all of our clients are compliant with prevailing wage rules and regulations. So we've reviewed some of that legal portion of it. We're going to kind of break down some numbers and what this can really mean to the company by utilizing. I saw a lot of the answers in the poll question as far as how you're using the prevailing wage money and some cash benefits to the employee. Is how much can the company really save by maximizing the amount that you put into employee benefits? So in this example, we just rounded some numbers, but we took the $65 per hour prevailing wage amount. So that's $65 an hour. It's 67 and change from that example, but it can vary by location and trade. Let's say your prevailing wage rate is $65 an hour. Let's say we break out 25 of that 65 and call that a fringe benefit amount. So you're paying the full $65 as cash wages to your employees on their paycheck. So you've got the base and the fringe out of that 65, and then you have that labor burden rate that we discussed, which is your payroll taxes and insurance premiums of roughly 30%. So from that $65 an hour, you have an additional $19.50 in labor burden. That brings your grand total hourly labor cost. Your true labor cost is $84.50 per hour on this prevailing wage project. Now, conversely, if we look at it as what is the hourly labor cost if you're putting that $25 into fringe benefits, into a benefits program for your employees versus paying it as cash wages to them. So now you have the $40 base wage that we talked about. That $40 goes through payroll. So you are paying the labor burden on that $40 an hour. So that $40 an hour, you do have to pay your payroll taxes, your workers' comp, et cetera on. So you take 30% of that, you have a labor burden rate of $12. Now, we still have to pay that $25 an hour in fringe benefits to the employees, but they're going to be paid into a Bonafide Trust for our benefits program. So you add the $25 to the 52, and your total hourly labor cost is $77, compared to the $84.50 on the previous slide. So you're going to be reducing your labor cost by $7.50 per hour if you were to use $25 an hour of that for benefits for your employees. Now, $7.50 an hour, anybody on the call today that does some of your bidding, and I'm sure that that would be very helpful in figuring out your cost on these projects and what you could bid on the project and be profitable. If you could reduce your labor cost by $7.50 an hour on all of these projects. And now to kind of add up what that would mean from a different size of company, how much prevailing wage work you're doing over the course of the year, et cetera. We just use some general numbers that are pretty common for people that we work with. But you've got $7.50 per hour per employee that you're saving in labor cost, that the company's going to go straight to your bottom line. It's money that you're not paying in taxes and insurance premiums. Let's say an employee does prevailing wage work half of the year, 1,040 hours. That'd be 50% of a full-time employee's work. Take that times $7.50 an hour, and you are saving $7,800 per employee per year. Now, if your company has 25 field employees, that ends up being $195,000 a year that you can save in payroll taxes, workers' comp, general liability premiums, simply by paying the prevailing wage rates how they were originally meant to be paid. By using them to also provide benefits for your employees will allow you to provide a better benefits package for your employees, while saving the company a substantial amount of money. I'm sure all of you can find a better way to spend $195,000 than taxes and insurance premiums. And if maybe, I know a lot of people on the call today were newer to prevailing wage. So let's say if you only did 25% prevailing wage work over the course of the year and said 50, you'll cut that number in half. It's still almost $100,000 that you can save a year in your labor cost. Or if you're wondering how to break into this market, you haven't been able to win many of these jobs in the past. This is how the companies that do a lot of prevailing wage work, this is how they're generally winning those bids with a strategy in place that's something like this. Now, as we get into what that actually means for your benefits programs for your employees, is, again, if we utilize a $25 per hour fringe amount for the employees, and again, if that employee was working half the year on a prevailing wage project, so 1,040 hours, that gives you, the company, $26,000 per year to pay for benefits for that employee. If you have 25 field employees, again, it's $650,000 a year, basically, that the company was awarded by whatever government entity is funding the project to pay for benefits for that employee. So you've got $26,000 a year that you can use to pay for health insurance, to fund an HRA program, to pay for other benefits, to fund the employee's retirement plan. And again, how you divvy that money up is up to the company. So you can use more or less. You can come up with a dollar amount that's good for you and good for your company and your employees, maximize your savings, provide good benefits for your employees, and ensure that you're winning more of these jobs going forward. But with these numbers, you could have up to $650,000 a year at your disposal to pay for benefits for these employees. And really, this is something that we see very commonly with our clients, is really using this as a strategy for growth, kind of in two different ways. One, to grow their business as far as the number of employees they have. And secondly, oftentimes growing the amount of prevailing wage work that they're doing. It's really common for us to have somebody start working with us, implement a strategy like this. They're doing 20% prevailing wage work. In a couple of years, they're doing 70, 80, 90% prevailing wage work because they started winning these jobs, started doing them very profitably, offering good benefits for their employees, allowing them to expand their company, hire more employees, and it kind of becomes a snowball effect over time. But what this chart is basically showing is that in year one with 25 employees, the company saved $195,000. And then each subsequent year, they added 5 more employees and continued to just do 50% prevailing wage work. But with the 5 more employees doing that, the savings grows year over year. So year 2, they saved $234,273 on upwards, to where after 5 years, it was $1.3 million in savings that a company can realize in, just changing how you're paying prevailing wages to your employees and reducing the taxes and insurance premiums that you pay based on that strategy. Another added benefit that can sometimes be overlooked is also how this affects the cost of your overtime rates. So fringe dollars must be paid to employees for all hours worked, including straight time and overtime. So if an employee is working overtime, you still do need to pay them the full prevailing wage amount. But if you're using the example, we've been using $25 an hour in fringe for benefits, that dollar amount does not need to be paid at time and a half. The amount that's paid as cash to the employees does need to be paid at time and a half. So basically, if you're paying the full amount, the $65 an hour as cash wages to your employees, you need to pay time and a half of the full $65. Versus if you're putting 25 into benefits, you're only paying time and a half on the base wage of 40. So in this example here, you can see the top row here is if you're paying the fringe dollars as cash, if you're basing your fringe as 40 and 25 for a total, then the overtime rate, time and a half of the base becomes 60, from 40 to 60, and time and a half of the fringe goes from 25 to 37.50 for a total of 97.50. Conversely, if that $25 an hour goes into a Bonafide fringe benefit program, you only need to pay the base at time and a half. So the base will be 60 again, so time and a half of 40. But then the fringe rate is 25 for straight time, and it stays 25 for overtime, since that's going into a benefits program. Again, saving the company $12.50 an hour in overtime pay in this example. So that's another way. A lot of companies see seasonality. There's times of the year where you may be a little bit slower, the employees aren't working very much. Then there's times of the year where a lot of your staff might be working overtime. And this is a way that your labor costs are really increased based on how you pay the fringe dollars to your employees. So it's a good strategy to help reduce those costs and keep them from spiraling where they can get pretty high on some of these jobs. So we've kind of already covered how you're able to reduce kind of your operating cost, your labor cost on your prevailing wage projects by implementing a good strategy for how you pay prevailing wages to your employees. That's one key component to the savings to the company. But if you get into how these benefits programs are utilized, you can also realize some substantial savings to the company on your benefits programs. So reducing the cost of benefits to the company, and also reducing the cost of benefits and taxes to the employees as well, and get into how these benefits are really beneficial to the employees themselves. So how we use this to reduce the cost of benefits is, one, you're using Fringe dollars to pay the employer portion of health insurance premiums. So again, when you win this job and you're required to pay the employees $67 an hour, the company's been awarded that money to pay for base wage and benefits for the employees. So you're able to use that money to pay the company's portion of their benefits programs. So again, you're using that to pay the employer's portion of their health insurance program. So depending on how much prevailing wage work you do, you can greatly reduce the amount of cost to the company of offering health insurance, since you're using some of that $67 and change to pay your portion of that employee's health insurance cost. Now, on top of that, we mentioned, a lot of companies see seasonality in their work. We can also utilize an hour banking program to help cover the cost of health insurance premiums during off months, or maybe you're not doing this prevailing wage work. Basically, how that works is that when you're doing prevailing wage work, we can hold some additional money back from the Fringe dollars into an hour bank for the employees to then pay their health insurance premiums in future months. You can also fund a HRA program with Fringe dollars. It's a great benefit to employees. And again, like everything else, reduces the cost, the labor cost of the company. And then how you make contributions to your 401k plan with Fringe dollars. There's some key components there in ensuring your plan is properly designed for prevailing wage money that can allow you to maximize that to greatly reduce the cost of your 401k plan and enhance the benefits to the employees and the owners of the company with how those dollars are put into the plan and how the plan is designed. So first one is hour banking. Prevailing wage, I touched on this a little bit. So we're just going to look at this at a company level. Now, again, every individual employee, they must keep the money that they earned. You're not able to take one employee's prevailing wage dollars and distribute it amongst other employees. So it does have to stay with each individual employee. But look at this as a kind of a company level. Let's say for the course of 1 month, the prevailing wage Fringe benefit that you designate paid in that month is $80,000. Now, the medical premiums for those employees are only $20,000. Obviously, we'll use that $80,000 to pay for the medical premiums for that month of $20,000, but then you have an additional $60,000 left over to pay for benefits. We can actually take that money and hold up to 4 months worth of medical premiums in reserve. It'll be in an individual account for each employee to then cover that employee's health insurance in future months when maybe you don't have as much work. It can help prevent or help keep the employee benefits year round without interruption, and at reducing the cost to the company, where if you wanted to offer uninterrupted benefits, the company would have to pay extra to do that. You've got prevailing wage money basically saved to use in future months. Now, the health reimbursement arrangement, or an HRA account, is really one of our preferred programs, specifically that employees request the most, or that they really appreciate having. Is you can take a portion of those prevailing wage dollars and put them onto an HRA account for the employees. It's basically like a medical debit card. And what's really neat about it is it's 100% tax-free money to the employee, and the company's saving all the labor costs that we've been discussing. The employee can then use that card to pay for any type of qualified medical expenses. So co-pays, prescriptions, etc. But it's tax-free money that the employee can have. The couple restrictions, or the one restriction, is the company does need to offer a health insurance plan for the employees to be able to utilize this. Now, all employees are eligible. So even if the company has to offer a plan, but even if one of the employees opted out, so they have coverage through a spouse, like I mentioned before, they can still participate in the HRA program and have some of their prevailing wage money put onto an HRA account for them to pay for medical expenses for dependent spouse, etc. And again, if they leave the company, they can take this with them and continue to pay medical expenses going forward, even when they're not working for you. they can continue to use that until all the funds are exhausted. So, and again, this can be used for any qualified medical expenses that you'll find that the IRS defines. But again, it'll cover their co-pays, deductibles, prescriptions, dental treatment, vision, medical premiums can be paid as well. If you get into like COBRA costs and stuff like that, if an employee leaves. And here's where just kind of an example of how much value this can provide to an employee. Well, a couple of different ways. One is, again, if you have seasonality, you've got times of the year where employees are not making as much money. If they happen, of course, these things never happen when you want them to, not that you ever would want them to, but they always happen, it seems like, in the worst amount of time. Employees, not getting as many hours, and then that's when they have an unexpected medical expense. Well, one, they have an HRA account that they can then use to pay for this. So they're not needing to come out of their own pocket with it. Where the real savings to the employee is that it's completely tax-free. So if they did not have this, if an employee had, for an example, a $1,000 dental bill, they would need to make a little over $1,300 probably to have $1,000 in their pocket when you figure FICA taxes that they pay, income taxes, et cetera. An employee needs to earn more than $1,000 to have $1,000 in their pocket on payday to pay that $1,000 medical bill. Whereas if you're deducting some of the prevailing wage money to put in this HRA, it's 100% tax-free. So dollar for dollar that goes in the plan, they keep. They have $1,000 in Fringe, they can pay that $1,000 medical bill there. There's no annual max amounts for how much money can go onto the HRA program. It does roll over year to year. It's not a use it or lose it situation. That's one of the rules with prevailing wage benefits. We go back to these being irrevocable, where you're not able to take the money back from the employee. All these plans have to be set up to where they can't forfeit that money. So if they don't use it, you can't have it set up where they lose it. It just rolls over year to year. There's no maximum amount that they can have in their account balance. Most companies will fund this to maybe what their annual deductible is or their annual max out of pocket. It doesn't make sense for an employee to have $20,000 on their account. More than likely, you'd rather have more of that money into a retirement plan where it's invested and growing. But they'll continue to have whatever is on their HRA account to utilize as any medical expenses come up. And the company can kind of determine how much they want to put on the card for employees. Vacation time can also be funded with prevailing wage money. You can, if your company offers your employees 40 hours a week of vacation, let's say, you can break that out into an hourly amount or to a dollar amount that the employees are going to get paid and deduct that from their Fringe dollars to fund their vacation time. This is one where I'd mentioned where a lot of companies can unfortunately get into some compliance concerns, is that if this account is managed by the company where they're simply deducting a portion of the Fringe, setting it aside in a company account to pay their employees at a later date. I'm sure in most cases, the employer's intentions are very well, and they're going to pay that money to the employees when they take time off work or at the end of the year. But if anything, bad would happen, let's say a company went out of business or they had unexpected expenses, and that money is sitting in a company account, there's nothing protecting that money to ensure it goes to the employee. It could end up going back to the company, or if an employee quits, are they going to pay that amount out to them or not? Again, by prevailing wage law, they have to get all those benefits, so you're not able to take any of that money back. So the vacation funds must be held in a third-party Bonafide Trust, have a trustee on the account that is a third party. All of those rules apply with a vacation plan. The one other thing to point out with this, it is the one benefit program where you do end up paying your payroll taxes on the money when the employee takes time off work. So you're not going to see the savings on the vacation plan from the tax side of things, but you can utilize prevailing wage money to pay them for time off work versus using company dollars to pay them. Now, the final benefits programs here that we're going to cover a little bit before we have a little bit of time for some Q&A is 401k plans, and really some of the kind of intricacies of a prevailing wage 401k plan, and if properly set up and properly designed, kind of the benefits to the employees, the company, and the owners of the business. So a few kind of starting points of information is employee contributions for a 401k plan. The limit that an employee can put in is $20,500 per year right now. Catch-up provisions for those over the age of 50 is $6,500. But the key number to keep in mind here is the maximum employer/employee contributions. So that's how much total an employee can have in a 401k plan in a year when you combine the amount that they put in plus their employer, profit share, prevailing wage, et cetera. And that dollar amount is actually $61,000 per year that an employee can have in their put into their qualified 401k plan through all sources, which is one of the key differences in design with a prevailing wage plan, is that you're not going to have that $20,500 limit because, again, these prevailing wage dollars are employer dollars going into the plan. The employer's deciding where the money goes. So it's considered an employer contribution, not an employee elective contribution. A couple other key points is that loan provisions are allowed. So employees can get loans out on their 401k plan. With our program, we do manage all of that. So it's not any work to the company. Distributions, including earnings, are included at taxable income at retirement, unless it's a Roth designation. And there are hardship distributions available for the employees from their 401k plans. But this is where we get into the kind of the plan design of a 401k plan specific to prevailing wage, is that, as Jennie mentioned, we've focused on this industry specific for 35 years now and have developed a program that's very unique with the prevailing wage contractor in mind. Is one, we're able to do all this housed within one retirement plan. If you go to a lot of maybe other retirement providers that don't focus on prevailing wage, they oftentimes will recommend that you set up two separate 401k plans as kind of a workaround to meet the prevailing wage guidelines. And while technically you can do that and be compliant, you're putting yourself at a lot more risk for compliance issues. You're doubling the cost of running two plans versus one, and the administrative work of having multiple plans. But with our plan design, you've got a prevailing wage bucket basically within the plan where those fringe dollars go into it. A traditional 401k plan that all employees can participate in, office staff, owners, anybody can put money in on their own. The company can do a match if they would like. That's optional. And then again, a profit sharing option that can give the company a lot of flexibility at the end of the year to do additional benefits into the retirement plan for the owners and the employees. Now, why this is so important, this plan design with kind of all the plans and the three plans built in one, is that it greatly increases the participation in the plan. If you decide that on all of your prevailing wage projects, $10 an hour is going to go into the retirement plan for all of your field employees, that's going to be a much higher participation rate and dollar amount than what you would probably have if you just left it up to the employees to put money in on their own. And what that does is that it allows the owners of the company to maximize their own retirement plan, because there's some rules that 401k plans have to pass, some testing, that basically the goal of those is to ensure that the owners of the company are not benefiting from the plan more than the employees. So by having all this additional money going in for the employees, the owners are able to put more money into their own retirement plans as well. It also reduced the cost of the plan from a fee standpoint, and also if you look at any matching options that the company has, if you do a safe harbor match or a discretionary match where the company is putting money in for the employees, we can actually use the prevailing wage dollars that those employees earned into the plan to count as their match that they would have received over the course of the year. Again, for your non-prevailing wage employees, they're not receiving this additional money, this additional benefit, regardless of the work that they're doing. So they're getting their match, and your prevailing wage employees are already getting this, let's say $10 an hour into the retirement plan. You don't need to match on top of that. You can actually use that to cover your match for those employees. So if the company spends $50,000 a year on a match, you could greatly reduce that by the prevailing wage money going into the plan. Additionally, if you wanted to get into profit sharing scenarios, they're a little bit more complex, and we do those custom for anybody that would be interested. But again, we can utilize the prevailing wage money that went into the plan as the profit sharing contribution for those employees, which gives you more flexibility in how you distribute money to other employees to maybe add extra money into a profit sharing for office staff that do not receive prevailing wage money, or again, for the owners of the company, gives you a lot more flexibility in how you divvy up a profit sharing contribution amongst all of the employees. Again, this is kind of just covered in the last slide. For the 401k plans, with it being in one, kind of all the plans in one, all of the prevailing wage money count as an offset for your match and also for the profit share. So it's a dollar for dollar offset. So after getting the savings on the labor cost, you're also reducing the cost of your 401k plans by that same amount, by the money that went into the plan. Then a few points kind of on retirement readiness and how this program can help your employees be ready for retiring. Is the average American nearing retirement age is not prepared for retirement. If their employer does not offer a 401k plan, their average retirement amount is less than $5,000 between the ages of 55 and 64. If a company does offer them a 401k plan, it's over $107,000 that they have on average for retirement. So just offering the plan, you can see, is going to set your employees up to be more likely to be ready for retirement when they approach that age. Now, when you add in the prevailing wage aspect, you can see how much that grows. A couple examples here. We have John Smith at the age of 31, just changed some of the names from some of our clients, but XYZ construction company employee for 9 years. His only contributions to the plan are from prevailing wage, and he already has $138,000 saved for retirement. More money than what the average person does, approaching retirement, he already has at the age of 31. And if you look at Richard Nelson, somebody at the age of 56, he's been with the company for 16 years. He's been contributing some money on his own, but 80% has been prevailing wage, and he has over $500,000 for retirement. So these plans can really help your employees be prepared for what they need to have saved for when the time comes for them to retire. Getting into a success story, and quickly, this is just kind of the progression that a company took from starting with us over the course of 5 years, from when they were doing a small amount of prevailing wage work. They only had about 25 employees. It was $250,000 or a little bit more. Within 5 years, they had grown to almost 200 employees and were putting in $1.5 million into their prevailing wage retirement program. And over that same amount of time, their employees, over 5 years, an employee would have $62,000 in their retirement plan and saving them over $18,000 in taxes at the employee level as well. So that's everything that we had for our presentation today. Thanks again, everybody, for joining us. Thanks, Janessa, and everybody with Western Washington for having us. We do have some time for a Q&A now. And just kind of as a reminder, all Western Washington ABC members receive $500 off setup of a prevailing wage plan with Beneco. If that's something that you're interested in talking to us, it is something that we offer to all of the members of the association. And I'll pop up our contact information on there too. And feel free, you could submit questions through the Q&A or the chat function, or turn off mute and ask us aloud, whatever works best. And I had a question regarding certified payroll. If you've got specific questions on that, we can touch on some of the certified payroll items. We don't offer certified payroll solutions, so it's not something that we do ourselves, but we can give you some advice or some questions on that. One that comes up is, I guess, how to document your fringe benefits on certified payroll. And on those, there's kind of generally two different check boxes, one for paying fringes cash versus paying fringes benefits. So checking whichever one applies, and then the breakdown, putting in the provider of the benefits program and what benefits are being offered. That should be on the certified payroll report. And then what happens if there's ever questions or issues or audits is, the Department of Labor or the L&I or whoever it's with has our contact information, and we can assist with those audits as far as they're basically curious, generally tracking to make sure that employee did get the benefits that you stated that they did. So that's a real quick high-level option on certified payroll, but feel free to shoot us an email if you've got specific questions and can help with. We also partner with LCP Tracker. They're a really good provider for or assistance with certified payroll specific and the services that they can offer. So we could also get you some contact information with them.
Hey, Jason, we have a question in chat from Ruby. If we are new to Prevailing Wage, where would be the best place to start to get the right numbers?
Yes, I missed that one there in the chat. If you're new to it, as far as the website, and it'll be included in the presentation that Blue Janessa will be sharing, or it'll be on your website. But there's a link to where you can go to get, if you're looking for the rates on the L&I website, you can go to your trade in your area to get what the rates are, if that's kind of the question that you're looking for. Any more questions, you can let us know. If it's more job classification, the listing should be on there as well, but that'd be the starting point. And then when you're submitting the bids for the project, they should have all that information there of what wage determination applies to that job in that area, but you can also research them online.
I noticed Melina had her hand up a minute ago, but it's down now. Did you still have a question?
Thank you, Janessa. I actually had the same question, but I had a little ruckus in the background. It was about resources to find more information on making sure that we're being compliant on our numbers as well. So I'm sure and also I apologize, I was a few minutes late. So I was just wondering, yeah, it was the same question. Where can I find more resources on determining appropriate amounts?
The wage amount?
Yeah.
Yep, they're all on the L&I website. If you've got a specific question as far as what trade to use or location, you can let us know. We can kind of assist with that. But they'll all be listed on there. And then how you divvy up the amount for benefits is kind of up to you. So what programs that you have in place and what amount you want to use for those programs.
Thank you very much.
You're welcome. Well, I think we've gotten to our time, Janessa. Do you have any closing remarks on your end?
I'll just note that they're displaying Jared Malone's contact information from ABC. He's our membership development manager. There's a number of folks in this webinar who are not members of ABC. If you're curious about it, Jared's a great person to reach out to. And I want to say a huge thank you to Jason and Jennie for doing this webinar today, as well as Construction Business School last week. We really appreciate all your time.
Well, thank you. We enjoy doing it. And I guess I would just add to Janessa's comment, anybody that's not a member of ABC, like Jennie was saying, we're a member of like 10 different locations or more now, is they do a lot of great programs, stuff like we did today, networking, other educational events on a variety of topics. So, definitely a great association to be a part of. If anybody's thinking about it, I would definitely encourage it. Well, thanks everybody for joining us today then.
Thank you, everybody.
Thank you.
Have a good day.